Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, August 16th. A couple economic news releases to go over today. Pretty important ones here. We'll start off with the housing starts for the month of July. So back in June, we had 1.223 million. Forecast supposed to go up a slight tick to 1.229, and it slipped down to 1.115 million. This is kind of for the inventory for the year, so what they're forecasting for the year. And obviously, that's a pretty big drop there. So building permits for the month of July. For June, we had 1.275 million. And again, this one slipped down to 1.223 million. Now, if you look at the overall picture, we're actually still pretty high. Just we get some months that are a little higher than others. We just try not to create another bubble. But we do have inventory problems. There's lack of land. They're having issues. Builders have been kind of mentioning that they're finding skilled labor to help create some of this. So these are some of the reasons why they're not able to build as much as they expect to build. But again, we don't want to overbuild like we did prior to the crisis and create another bubble here and having oversupply. Later today, we'll also get the FOMC minutes. This could be a definite market mover. Sometimes it hasn't been too kind to bonds. This will come out at 11 o'clock Pacific Standard Time. And one of the things that they're going to really be looking for, of course, we've been harping on for a while, is the balance sheet. When are they going to start it, and by what increments, and how are they going to reduce it? So any information about the reduction of the balance sheet, they're going to be looking for. Also, they might even look for clues of any possible additional rate hikes this year. Fed Dudley kind of made a comment the other day stating that he would be in favor of a possible rate hike this year as well. Or at least, he basically didn't say in favor, but he basically said he wouldn't be opposed to it. So I guess there's a little bit of difference there. But that's something that could be brought back up, that maybe we will get another rate hike this year. You know, a lot of people kind of dismissed it. Let's go ahead and take a look here at the headline news. Stock market's up. We got a couple different industries are up, from financial to healthcare and different things like that are up. That's kind of driving the stock market. And then, of course, you know, it's not up a tremendous amount because they are kind of waiting for the FOMC minutes to come out. So they want to kind of gauge as to what the Fed is thinking, what they're these are kind of behind the scenes, so to speak. What's not always in the announcement. They want to look for clues that were not in the announcement. And again, going forward here, see where things are at. Here's the bond market. Now we are down for the day. We're down probably about a few basis points, but we are currently up about 6 basis points. I'm sorry, no, we're actually up. Excuse me, pardon me. Yesterday we ended up down, so right now we're up about 6 basis points from where we left off yesterday. So we're up 6 basis points so far. We've been kind of trading in this range here. A bit just off the 25-day moving average and the 50-day moving average here. So we're still above those, but down below the first level of resistance here. So the ceiling has been, even though we broke above it for about a week or so there, now we kind of fell below it and kind of stuck in between this 25, 50-day moving average range here, as you can see right here, where they're kind of meeting right there, and this first level resistance here. So pricing really hasn't changed from yesterday. Pricing, since they're pretty close in where we were, from where we started to where we ended, from where we started to where we ended. So pricing is going to be relatively the same what we left off yesterday in terms of interest rates here today. All right, folks, so if you guys would like to get more, that pretty much concludes it. If you guys would like to get further updates, just come over to Twitter. You can find me at Mike Bjork. I do post on Twitter throughout the day on the updates of where the market's heading and where it's at and where it closes. So feel free to come over there. Also, if you guys are in the market for a mortgage, whether if it's a purchase or a refinance, I can assist in both aspects. I'm a loan officer. We do help provide pre-approvals for clients looking to buy properties, as well as even submit their files to underwriting so you get a credit approval prior to finding your next property. So that way you have a nice strong offer when you submit it to the seller, showing that the underwriter, you have underwriting approval already based on your credit profile. Also, refinances, we're doing stuff for taking money out of the properties and repositioning it. Some people are because they're having a hard time finding places, they've given up and they're just adding on or doing some rehab work on their current houses to investors who are wanting to buy more properties. So those are different aspects. Then we also got people trying to get out of the adjustable rate mortgages and go into a fixed rate as the short-term rates are rising as we go through in the near future and the rising rate environment here. All right, folks. So, anyways, if you got any of those scenarios, please feel free to run it by me. Email is the best way to contact me. Hope you guys have a great day. I look forward to see you guys tomorrow. Thanks so much for watching. Bye bye.